Next up will be Stephen Zhu, discussing investing in Australia and Asia Pacific and North America, founding partner of INP Capital.
Hello, everyone. My name is Stephen Xu. I'm the co-founder of INP Capital. It's a great opportunity to come back to live, stage to talk to people rather than go through a Zoom video call and in the last 2 years. So I'm here is just share some experience about what we have done in the past 5 years, investing in those regions, and hopefully can provide some insights or experience for you guys for investment. So first of all, I'll just talk about who we are. INP Capital is a boutique investment firm focusing investing in and growing with entrepreneurs. We basically looking for opportunity in 4 regions, which our office based in North America, China, Australia, and we just opened a new office in Singapore to capture the opportunity in Southeast Asia. When we first established INP Capital, we asked our question, who we are and what's our value, what's our advantage to provide value to our investors. So we think the first of all is our global view, because we have the gene about East plus West. We're always thinking the sparks with different culture, with different market. You can identify the different trend or different opportunity in certain region, and that have opportunity can duplicate in other regions. So you can verify your business model and then successful in that market, and then can duplicate opportunity in others. So that's one thing we have. And the second is deal flow. So we focus on the regions we have the office in, we have be part of the ecosystem, can get the first hand deal flow. And then the third part is the localized team. So we really emphasize we be part of the ecosystem. For example, in Australia, we be part of Australia ecosystem. If we in Canada or in China or in Southeast Asia. So that's critical to identify different opportunity and trends you may not see from other area. So far, this is, the company journey we have. So 2018, we established, and 2019, we have the first investment in Australia, but 2 new funds established. And in 2020, I think it's fortunate we have the first unicorn in our portfolio company. And then the next year, during the COVID, we lucky enough to have the first exit of our funds with DPI 43 times to the investor, which is a big, I think, reward to our investor, an early investor to back us as well. And this year we have our third unicorn company in our portfolio, and we expand to Singapore, and then we expect next year we have 2 more exits, and also we continue the journey to looking for early stage, high potential company becomes, unicorn in the next stage. So our philosophy in a kind of like 3 pillars. So we're looking for, top down, which we identify the trend, identify the market based on, what we see in China, what we see in US, or other region we embrace in that ecosystem, and then identify the opportunities. And then the bottom up is looking for the team, the founders who have the potential or the features or characteristics can bring the company into future success. And then the last part is we not like a financial investor, we invest and then leave them alone, more provide their market access where we are in, and also local government connections, and also the network of investors broaden their capital raising capability as well. So that's the core team. So Jackie and myself, co-founders, will ex-PwC trained insurance and transaction, and chartered accountant. So we know the numbers well, and we have the experience in both in China and overseas. So we know different cultures. We know different, the game, how we play. And Jessica is our Canadian partner. And Mr. Yang and Mr. Wong is in Hong Kong and Singapore. So basically, just cover the area we are in investment. So here is just like a snapshot of active portfolios. Here, I just want to kind of demonstrate our portfolio quite diversified and also cover the regions we are in. Applied Board is a Canadian company doing the education technology, and the first, basically the only unicorn in that category back in 2020. And Grant Markets, e-commerce, digitalization, supply chain solution company, US. Genesis Samsara is the clean tech company, which sort out solution for waste, for recycled like plastic bottles, all these things. Expensive is carbon trading platform, also is ESG product solution. And so it's quite diversified here. We're looking for more opportunities. So in the middle, the Naluri one is in Malaysia, Singapore. So that's a digital health solution for that. That's our first attempt investment in Southeast Asia. So next we'll just talk about some trend we see in these regions, which kind of like some insights to share with everyone here. Oh, sorry, I'll go back. Yeah, so I think everyone here has, from the news or personal feeling, the first half 2022 is quite tough. You see the trend, the venture financing is dropped down significantly. But what we see is, in 2021, it's a record for VC fundraising. So despite a mature dry powder, the VC investor has now become more cautious, conservative, looking for cash conservation or profitability pathway for investment opportunities. But also we'll see is there's some resilience in the investment community, right? You see 160 billion already raised in the system. It's still a lot of money can be raised there. And some sectors like energy, alternative energy, or battery storage is very hot area, or ESG related. So I think it's now a lot of investors pick the sectors or pick the stage to looking for opportunities. So here it just kind of shows some trend in US, Canada, Australia, Asia. You see in US actually demonstrate quite, I think the most resilience in that VC investment. It's actually dropped, but it's not that significant compared to Asia or compared to Canada and Australia. So if you look at the big deal or the mega deal in US, it's 1.7 billion raised by SpaceX, and 2 billion raised by Epic Games, and 1.5 billion raised by the GoPuff. So it's those big numbers. It's still, if you could have a good quality company in the right market, you still can get money, but it's just a little bit tough environment. And if you look at Asia, I think the most important is because India and China slow down, and the impact on that will significant, impact on that Asia venture financing. But if you look at in more detail or sub-market, the alternative energy, the semiconductor, AI still very, very attractive in that region for investment going forward. So there are still opportunities. We think from VC perspective, we can explore under this current condition. So our basic focus, in the next, 5-10 years, Asia is still our, mature area, especially in China and also Southeast Asia. I think for those parts, we see a lot of opportunities for China on specific sectors, but you need, the team, you need expertise, onshore, not offshore, to analyze those opportunities. Southeast Asia, I see a lot, consumer-based or, while mature the business model developed in China can move or duplicate, seek the success in Southeast Asia market. And then the second part is disrupt technology. I think this is always, the theme. We're looking for opportunities like Web3. I think it's still early stage, but a lot of things you can see, you can experience. 3D technology, I think, is the stage we can, move from 2D now to 3D because we have upgrade on hardware capability. We have a lot more software, solution power on that. And then space tech and the food technology. And for the food technology, I really focus on how we can get, to supply those growing populations, right? So the alternative protein or other solutions will give opportunity on that. And renewable energy application for AI, I think this one is a continuous theme. It's not just something new, but more in-depth application into all different areas. And then digitalization supply chain. We have experienced significant disruption in supply chain. How we make that efficient, how we lower the cost. I think now the technology have more potential on that. The third part, I think, very hot topic. You see every day on news, talking about ESG, carbon emission, all this green finance, everything. I think this is definitely a theme for investment you consider in those regions, especially in those government lead opportunities. So here, I think it's my last slide, but not least, some experience we've been in these regions and share with the guys. It's all not right or wrong, but just share some lights. So if you look at the ecosystem here, we only talk about the early stage tech company. I'm not talking about real estate. I'm not talking about mining or talking about other things or later stage. If you compare with these 4 countries, you will see Australia, if you're back to 7-8 years, for early stage tech company, it's quite tough environment. The investors not really, get into that area. But now the ecosystem improves. We see a lot more successful stories. And also the angel investor community now become more and more, appealing. And also we got more early stage VC to support early stage companies. And if you look at US and China, they pretty much quite mature, got a quite, sufficient capital to support the company, and also well-known accelerators to provide network, not just for capital raising, but also for, business commercial. And for the founder part, because for early stage company, founding team are very important, it's critical. What we see the difference is in Australia, they're more prudent. So they're more looking for how we can get the business into profit, how we can sufficient operate. But if you look at US and China, they're more aggressive, looking for expansion, looking for how quickly to get, more market shares to demonstrate my solution to the market, to the customer. And Canada kind of in between because they're close to US. They a lot of take advantage of US, capital. Lots of company come in, raise a little bit capital and go into US like a YC or startup 500, this type of accelerator. And regarding valuation, this is what I find quite amazing is, Australia, Canada, they have quite low valuation. I'm not saying low, it's relatively low, but I see it's a reasonable valuation compared to US and China. If I won't mention a lot of names, but our experience, like in US, like a seed round or pre-A, they can get 30 million, 40 million, even 50 million US pre-money valuation, and then they can, like over 1 week, just oversubscribe. So that kind of like, if you put that into Australia, you will say, oh, that's quite amazing. But here, maybe 10 million, 5 million, pre-money for that stage, you still need to really hard to pitch the investor, convince the investor. So the system is quite different. And I think the last part is the unicorn. I just highlight some sectors you see here. The fintech is the same, and the e-commerce, SaaS is all the same. So if you thinking about invest in other regions, other countries, those sectors or those areas, you may think, oh, that might have some more opportunity to go through. So I think this is the last from me. Thank you very much, and hopefully I got more interactive. Thank you.